Let me tell you about two guys I'll call Mike and Jason. Same bank, same branch. Both opened accounts the same week in 2019. Both deposited $10,000. Both felt responsible. Both felt like adults who were handling their money correctly. Today, Mike still has that $10,000 sitting in his savings account at the same bank. His balance is $10,412. He is proud of it. He has not touched it. He calls it his emergency fund. He thinks it is growing. Jason moved his $10,000 after 3 months. Same amount. Different account. Today his balance is $14,200. Same starting amount. Same 5 years. $3,800 difference. From one decision neither of them fully understood when they made it. My name is Nick, and today we are exposing what I call the savings account scam. Not technically illegal. Not a conspiracy. Just a completely legal system where your bank pays you almost nothing to hold your money, then turns around and lends that exact same money out at 7, 8, 9, sometimes 24% interest and pockets the difference. Every single day. While you sleep. While you feel responsible for having money in savings. Let's start with the actual numbers, because the numbers are what make this real. The average savings account interest rate at a major U.S. bank right now is 0.46% annually. That is the average. Many of the biggest banks in America, Chase, Bank of America, Wells Fargo, are paying between 0.01% and 0.5% on standard savings accounts. Chase's basic savings account pays 0.01%. That is not a typo. 0.01%. On a $10,000 deposit at 0.01%, you earn exactly $1 per year. $1. For letting a $1 trillion institution hold and use your money for 365 days. They send you $1. You say thank you. Meanwhile, here is what your bank does with that $10,000 the moment you deposit it. They lend it out. Immediately. To someone with a credit card at 24.99% APR. To someone with a personal loan at 11%. To someone with a car loan at 7%. To a business with a commercial loan at 8.5%. The bank takes your money, pays you 0.01%, lends it at 10 to 25 times that rate, and keeps the spread. Every day, on every dollar, from every account holder. JP Morgan Chase made $89 billion in net interest income in 2024. Net interest income is the technical term for the gap between what they pay depositors and what they charge borrowers. $89 billion. From one bank. In 1 year. Funded largely by the difference between the 0.01% they paid you and the 24% they charged the guy who swiped his card at Target. Now here is the part that should make you genuinely uncomfortable. While your bank has been paying you 0.01%, high-yield savings accounts at online banks have been paying 4.5 to 5% for the last 2 years. Same FDIC insurance. Same deposit protection. Same government guarantee that your money is safe up to $250,000. Just a completely different interest rate. The difference between 0.01% and 4.75% on a $10,000 deposit over 5 years is not a rounding error. At 0.01%, your $10,000 becomes $10,005. At 4.75%, your $10,000 becomes $12,613. That is a $2,608 difference. From doing nothing differently except where you put the money. Scale that up. $50,000 emergency fund at 0.01% for 5 years gives you $50,025. The same $50,000 at 4.75% gives you $63,065. The bank kept $13,040 of growth that should have been yours. Not through fraud. Not through theft. Just through your not knowing there was a better option sitting one Google search away. This is the savings account scam. It is not dramatic. It is not a villain in a back room. It is just a system that depends entirely on you not asking questions, not comparing rates, and not moving your money to where it actually earns something. Here is why most people never move. And this part is important because it is not laziness. It is psychology. Your primary bank is where your paycheck lands. It is where your automatic payments pull from. It is the app on your phone you have used for 7 years. Moving feels complicated. Moving feels risky even though FDIC insurance makes it objectively not risky. Moving feels like a project. And the bank knows all of this. The friction of staying is their business model. Every month you do not move is another month they collect the spread on your balance. They also count on you confusing activity with progress. Your savings account balance goes up every time you deposit money. It feels like it is growing. You check it and see a bigger number. That bigger number is almost entirely from your own deposits, not from interest. But the visual of a growing balance creates a feeling of financial health that is mostly illusion. Now let me address the one real objection, because I know someone is thinking it. But Nick, I keep my savings account for easy access. High-yield accounts take days to transfer. What if I need the money fast? Fair point. Partially. Most high-yield savings accounts now transfer within 1 to 2 business days. Some are same day. And most financial advisors recommend keeping 1 to 2 months of expenses in your primary bank checking account for true immediate emergencies. The rest of your emergency fund, the larger portion, does not need to be accessible in the next 4 hours. It needs to be accessible in the next 48 hours. High-yield savings accounts do that just fine. The liquidity argument is real, but it covers about $2,000 worth of immediate access money. Not $30,000 sitting in a Chase savings account earning $1 a year. Here is exactly what to do, and it takes about 25 minutes of your life. Open a high-yield savings account at any of the following. Marcus by Goldman Sachs, Ally Bank, SoFi. Marcus is currently paying around 4.5%, Ally around 4.35%, all FDIC insured, all free to open. No minimum balance requirements on most. Transfer everything above your immediate 1-month buffer from your regular savings into the high-yield account. Set up the link between accounts. Done. Your emergency fund now earns real money instead of sending you $1 a year. That is the entire move. 25 minutes. No risk, no complexity, just the difference between knowing the system and not knowing it. Mike still has his money at Chase. He will earn about $5 this year on his $10,000. He feels responsible. He feels safe. He is neither losing money nor building anything. He is just slowly losing to inflation while his bank makes billions off the spread. Jason moved his money in 2019. His $10,000 is now $14,200. He did not invest it in the market. He did not take any risk. He just stopped letting the bank keep the interest that belonged to him. Here is the sentence to take from this video. Your savings account is not keeping your money safe. It is keeping your money still. And still money in a 4.5% world is quietly losing to inflation, to opportunity cost, and to a bank that figured out you would not notice. Notice, move the money, take the 25 minutes. That is it. If this helped, hit like and subscribe. Drop your current savings account interest rate in the comments. Bet most of you have never actually looked it up. Not financial advice. Educational only. Your decisions are entirely yours. See you in the next